Mayuresh, hi. Good to have you on, Mayuresh. Starting first with FMCG, because that's where the headlines are coming in from. Great set from Britannia, ITC, what do we even say? But then you have a Dabur right now where obviously, it's a different story out there. The rural pressure is very much showing up in the top line, though they've actually been fighting hard on the margin. Our numbers were expecting a greater compression and they've managed to fight at the EBITDA level, but the problem is in the top line. Your thoughts? Let's start with a stock like Dabur. It has the valuation comfort behind it compared to some of the others, but would you go for it?
Afternoon, Surbi. No, looking at numbers, I think the price increases that have been taken by most FMCG companies in the previous 2 to 3 quarters to offset the input cost inflation has largely been playing out in terms of the margin performance. Obviously, I think the adverse effect comes down in terms of volume growth, and that probably is getting witnessed in Dabur at this point of time. However, I think the entire focus that a lot of FMCG companies have laid forth is the direct distribution reach and the rural reach as well. Along with that, a lot of these companies are getting into cost-saving programs as well. For Dabur in particular, again, I think we need to go into line by line on why the performance specifically in terms of volume degrowth was and what the management take is. But generally, I think if you probably look at the other set of numbers, and as you mentioned, Britannia, I think a very, very strong set of numbers. 3 key inputs, wheat, sugar, and milk, they are probably showing signs of stability at this point of time. You've obviously also seen palm oil prices come up significantly over the past 4 quarters. And therefore, the kind of expansion that you saw in gross as well as EBITDA margins was exemplary. I saw Mangalam's interview with Varun Berry as well, getting into food products, croissants, cakes, ramping up, as I said, the rural network and the direct distribution reach as well should probably prop up even stronger cash flows going forward. So, yeah, I think no negative news for ITC in the budget as well in the pack again. Okay. A very marginal increase in terms of understand. So ITC Britannia probably stay on top.
Mayuresh, well, valuation-wise, ACC is the one that has that valuation comfort, right? What's your view on it? I mean, among both these two twins, would you go for any of them, ACC or Ambuja? Or do you believe that you rather stick to the other names, the Ultratechs of the world that were otherwise going to face some bit of a challenge from both these two?
Absolutely. So in my opinion, again, I think what we're looking at in terms of the entire perspective when it comes to the cement pack as a whole, the EBITDA performance for cement companies were subdued because of input prices being significantly higher and they sitting on high cost inventory as well. On the valuation stacked up, you're absolutely right, Nigel. I think ACC is probably one of the most lucrative bets at this point of time. But again, I think the kind of news flow that is surrounding it, and again, I'll have to go through this mail that has come through from the company at this point. But again, I think sticking with leaders, as our O'Neill methodology always believes in, Ultratech probably stands very, very close to its pivot level. And therefore, I think the kind of EBITDA performance, as I mentioned, 900 rupees per ton, you will see a significant accretion happening. Both high-grade and medium-grade coal have come off significantly. Some spurt that you've seen in the last couple of weeks, but still significantly lower year-on-year and quarter-on-quarter as well. And therefore, the new inventory which comes through will push through on a quarter-on-quarter basis sequentially 300 to 400 rupees EBITDA per ton in a positive fashion. Add to that, freight costs remaining extremely constant at this point of time should add another 50 to 100 odd rupees. They're pushing in volumes. They've done that in the past quarter. Again, I think the capacity increases that are happening will probably entail utilization levels start ramping up as we go ahead.
Got it.
And overall, I think the of the speed was quite decent as well. So yeah, Ultratech probably will stop.
The other area which has seen a sharp knock is the life insurance space. And I don't know, Mayuresh, HDFC Life, which is the leader, is seen another 4-5% knock after yesterday's 10% sell-off. What's your sense? Have you looked at how much earnings estimates need to be lowered? I mean, the company also will be reactive, right? I mean, they'll and I think Vibha, when she joined us yesterday, said that we will work to basically sell more policies to make up for this. What's your sense?
So, Prashant, I think with the announcements that have come into the budget yesterday, and I was hearing out the management of HDFC Life as well. Obviously, I think the product mix needs to undergo a change with the kind of regulatory changes that have probably come through. The second element, obviously, is with the product mix that will now go through, assuming that a lot more newer products get introduced. the value of new business margins on these products will definitely be lower. Now, life insurance companies were getting valued on two aspects. One, in terms of how the VNB margins were playing out, and the annualized premium equivalents as well. So I think the APE growth is definitely expected to come down for a lot of players. SBI Life probably becomes an outlier in terms of the entire product mix within the life insurance space at this point of time. HDFC Life, the most impacted, considering the budgetary changes which have taken place. And therefore, I think the embedded value and the return on embedded value won't take a knock. Therefore, I think there will be a valuation adjustment and some element of derating which has probably happened in terms of price. Now, it all depends on what kind of traction takes place. And therefore, I think these stocks will largely underperform, in my opinion, at least over the next week.
The market is in the green. So I think all told, after all of that up and down, and just look at that Nifty intraday chart. It's a wild ride, but it's green. 17,617, 17,618 is where we are at. Mayuresh, should one have the mental makeup should be to try and take longs here, or stay away, or look for selling opportunities in the near to medium term? What's your sense?
Absolutely, Prashant. So I think on the O'Neill lens, we're waiting for a rally attempt, which basically means we need the markets not to break the recent lows that they've done. And if we get a follow-through day, which is a reasonable 1.5% move on the Nifty, we'll probably get it to a confirmed uptrend. Having said that, I think stocks where the earnings profile has remained strong, that should probably come onto your watch list. And we have definitely created a watch list. So Polycab, APL Apollo Tubes just reported a decent set of numbers, do remain on our watch list. As I said, Britannia, ITC, probably very, very close to pivot levels as well. And a lot of these infra-stroke railway stocks on our watch list as well. So Siemens, a little bit away in terms of price strength, or even something like an SKF bearings as well. Significant amount of expectations on railway capex can be played out on these stocks. So creating a very healthy watch list, Prashant, at this point.
All right, Mayuresh, we'll leave it there. Thank you very much, and speak to you soon. Appreciate it.